there are so many things to say, but let me start off, for example, with what Kevin has presented. It has showed that actually the East African growth average as we stand now is much higher than the rest of Africa at 5.7%. And that is the growth, the real growth that you're finding also in Kenya in 2023, which gave us some reason to think and even to very strongly believe that we have a very strong economic recovery, but it is fragile. So when you look at that growth, you can actually talk a lot in terms of that. But let me offer 4 points which I like to relate so much, and most of which was covered by the report by Kevin. And the first one is human capital development. You know, we have worked in this area, and we had a session on this. Let me say, I like starting from where are we in terms of education? Where are we in terms of health? And especially health infrastructure that was tested to the limit by COVID-19. But where are we also on labor market and then nutrition? In terms of human capital development, you have to connect those 4 dots. Because in a sense, we can even spring from there and say, where you see institutional failure problems is because of our human capital development. And that is the characteristic in Africa. So we can talk about that, but I wanted just to make sure that I connect those dots. The second one is markets. Now, I always give Kenyan examples because essentially, when you see where markets have failed, it means production has also failed. It means that investments have sunk. You can go on and on and on. But the most important thing about markets is that it's going to signal participation in a particular market. It is going to signal economic rents are shared and distributed in the markets. If you look at the works, for example, by Justin Lee, he'll tell you that economic transformation depends very much on some critical thresholds of capital accumulation. That's savings. But that is actually distributed in the marketplace. So in a sense, if markets collapse, then it means that we cannot get there. Let me give examples in Kenya. Kenya is an agricultural economy. So smallholder producers, even producing tea, coffee, and all that, will observe, they don't know how the export market works, but they have an aggregator. So upstream, they are looking at the market is functioning. Downstream, they are going to increase production and productivity. But if the markets fail, it means it fails them not only in terms of economic rent and distribution, but also on their own investment. Third, let me go to domestic resource mobilization, and Kevin has talked about it. It's a subject that I have talked about. In the last decade, I was invited all over, even in the African Development Bank, to talk about domestic resource mobilization. We need to look at it in terms of, first, our own tax instruments and the structure of those instruments, they can be optimized. The second thing is the market performance itself. We have to look into it. And we have to look into it in terms of how we can deal with it. It is okay, we can finance infrastructure through debt. But we have actually to ask ourselves that debt, when it is contracted, you have to make sure that the real interest rates are not significantly higher than the real growth, because you are going to signal solvency challenges. That's why we are talking about debt distress right now. So in a sense, we are actually saying we have a lot of space to deal with. And finally, we have to know that the fourth industrial revolution will be ignited by digitization. Digital evolution is coming to us. It's efficient. It can create efficiency across all the things that we are doing. And that is why we really need to look at that. We need to look at that. Recently, I've been talking about the 5.7% growth in Kenya. And I was saying, I've been asking myself, how do we protect that growth? Because it's a strong signal for economic recovery. How do we protect it? And that is something that this report is telling us, these are the things you need to do, but it's also telling the East African and other regions that growth that you have, and you believe that it is a strong recovery coming in, but fragile because of the factors facing us, you need to come up with a structure to protect it so that the future, it creates a momentum for future. Success begets success. Let me stop there.